On Business Incorporated today, Egypt eases condition to attract foreign investors. And the Gambia records a boost in tourism revenue. Air Zimbabwe clears IATA debt. Good afternoon. It's the final one for the week. Welcome to Business Incorporated on Channels Television. I'm Ini John McQuarrie. We start off with the market. As usual, head to the equities in Nigeria. We see that it's marginally negative, as it was yesterday, smaller than it was yesterday, 0.03%, at 55,804.82. That's lost the positive vibes it closed with yesterday. South Africa GSE down more than 2%, 2.04% to be precise. And then we're now at 76,000. This was at 78, 79,000. Hopefully it will recover real soon. We'll move to other parts of the region. Now, Egypt is closed today at yesterday. It closed at 0.85%. Really good, almost 1% there. And Kenya closed yesterday again in the red, and this is the second day it's closing more than 3% in the red. We really need to find out what's going on with that market. We move to the Middle East now, where sentiments were mixed, actually. Two of those markets are closed for today. So we have trading today, Abu Dhabi, 0.92% in the red at 3,378.15. Dubai also in the red, 0.54%. We see Saudi Arabia closed today, but closed positive yesterday, 0.51%. And Qatar also closed in the negative, 0.15%. Before we move on to Europe, let's see what's going on at the NGX. Talking about intraday trading in Nigeria. Yesterday, intraday, we see it was down 0.22%, but closed positive, marginal, 0.04%. Today, again, we see that it's 0.03% in the red at intraday. Do we expect it to recover before the close of trade? Well, let's have stockbroker Abdulrasheed Momo. He's with TRW Stockbrokers, joining us now to give us insights. What's going on the trading floor at this time? Good afternoon, Mr. Momo. Tell us, do we expect... Is this a trend? Yesterday, intraday were negative, but we closed positive. Now it's another negative. Do we expect another positive close at the close of trade today?
No, I don't think so. I don't think so. Most of the indexes are in red for now. Generally, what's happening in the market that the market is actually going up in a systematic way. I call it a small staircase formation. But some of my indicators are not actually moving the same way. They're not actually making new highs. So what I actually expect now is that I think something needs to trigger the market now, and I feel we are waiting those financials. So the market is just floating for now. There's nothing new to actually trigger the market. So I think when we start seeing those year-end financials, then there might not be a change. But for now, the market is just flat. We have not seen any, despite the fact we have been seeing those corrections coming out, we've not actually seen any stock recording a new low. So I think it's still steady for now. Just market taking some correction outside.
What about corn oil? Yesterday it lost almost 10% and actually dragged that counter down more than 3%, about 2% yesterday. Is it recovering? Are investors taking advantage of the drop in price to get on board?
You need to ask me what price was corn oil before it went to this current price. I mean, there's one thing in the market, the speed at which a stock goes up, the same speed is used to come down. The momentum of that speed going up will be the same momentum it's going to use in coming down. I mean, for some time, we've not actually seen that stock move that high because of float. So a lot of traders actually plays the market, and a lot of people actually fell for it. One thing about that stock is that you can easily move the prices up because there's no float. And when on a general market, you won't hardly see volumes traded on it. So if the price is actually coming down now, it's just most of the investors that are taking profit along the line.
All right, sir. So final words is going to be a negative market at the close of trade today, yes?
The market cannot be up all the time. We need to see corrections are good for the market once in a while. So what we are seeing now is more of a correction. I actually spotted this like 3 weeks ago. Prices are going up, but indicators are not going up. It shows a divergence. It's a bearish divergence. The market will definitely go, but for now, the market needs to. Stocks don't. It's not always one direction. You always have high correction. But for now, what we are in now, it's a correction, and we expect to see more of that.
All right, okay. We'll take your word for it, and we know that you are the graph master. You always go back to that graph. Well, thank you so much, Mr. Abdul-Rashid Momo, for sharing your thoughts with us on intraday trading at this time.
Thank you. Have a nice weekend.
You too. All right, so let's move outside Africa now. In Europe, the European Union has unveiled plans to stop green energy companies from moving operations to the United States. The measures come in response to the U.S. Inflation Act, which is a massive subsidy scheme, which EU officials fear would lead to an exodus of companies across the Atlantic. Well, to tell us more about this, we have Kate Ferguson now from Berlin. Hi, Kate. Good afternoon. So what's the EU doing to hold these businesses back home?
Well, fundamentally, it's doing what the United States has already done, offering generous subsidies to businesses that are key to the green transition. So if you're a company that makes solar panels or electric batteries or heat pumps, for example, the EU is basically saying, please don't leave and go to the United States. We will match whatever benefit you can hope to get there. Now, this is a big deal because it marks a shift in how the EU handles state aid. Traditionally, the bloc has had many restrictions on how countries can subsidize companies. Now it looks like it's ready to loosen the purse strings. And under this new set of more relaxed rules, poorer regions in the EU would be allowed to spend up to 350 million euros to subsidize a particular project, and richer areas up to 150 million. Now, those funds will reportedly be made available very quickly in order to match the speed at which things are moving in the US.
All right, so why is this such a big conversation, this sense of urgency around this? Why now?
Well, I can probably answer this best with a concrete example. Now, earlier this week, German car giant Volkswagen, it said it was putting its plan to build an electric battery plant in Eastern Europe on hold after figuring out that it could be entitled to around $10 billion in incentives over the lifetime of a similar facility in North America. The pervasive feeling was simply that things were moving ahead much faster in the US than in Europe. Now, Volkswagen says it will wait and see what exactly the EU is offering now. But this is a really big challenge for the bloc. First of all, it wasn't prepared for the sheer size of the US Inflation Act, which includes a package worth $369 billion in subsidies and tax credits. It's also come at a time when public spending is already under strain because of the pandemic and the war in Ukraine. And finally, there's this challenge of bureaucracy. The EU is a bloc of 27 countries, and decision-making is often a far from straightforward process. So fundamentally, though, when it comes to addressing climate change, more competition and increased government involvement sounds like a good thing.
All right, and how are investors around there? What are they saying about these plans?
I think you can say any mechanism that leads to a thriving green energy industry in Europe will be of interest to investors, especially at a time of such uncertainty in the energy market due to Russia's war in Ukraine. European traders are, after all, looking for promising places to park their money, and there's hope that climate-friendly investments will pay off in the long term, especially at a time when borrowing has got so expensive. Those persistent fears of interest rate hikes have also been weighing on the markets this week. Real Real estate was especially under pressure, with German property firm LEG Immobilien posting steep losses. Mining stocks have also taken a hit. That was due to a fall in the price of copper due to a strong dollar. Overall, these subsidies are exciting for anyone looking to get into climate-friendly projects, but there are, of course, also legitimate concerns about whether the EU can afford another big expense after spending so much on both the pandemic and the energy crisis. It'll be really interesting to see how all this plays out on the markets in the weeks and months to come.
Certainly, Kate, it will be very interesting to see, and trust you guys there to be our eyes and our ears on this matter. Let's move to Asia now, where stocks in Asia Pacific dipped on Friday as investors await the closely watched February non-farm payrolls report from the U.S. that could further determine the direction on the Federal Reserve's rate hikes. Now, let's look at the numbers. We see a whole lot of red there. Nikkei 225 in the red, 1.67%. The Kospi also in the red. A whole lot of red here. The Hang Seng Index 3% less at 19,319.92. AX 200 of Australia also in the red, 2.28%. And Shanghai Composite in the red. It's a red market for the Asian market at this time. And let's go over to the United States and see if we have a better color there. Unfortunately, it doesn't look so well. Futures tied to the Dow Jones Industrial Average. It fell also on Friday as investors look to upcoming job data for clues on how the Federal Reserve. Yesterday was a terrible day for this market, but we'll let Maria Bird tell us that. Let's look at the numbers, the features. The features shows that Dow Jones is 1.66% in the red again. S&P in the red, almost 2%, 1.85% at 3,918.3. To the NASDAQ, even worse, more than 2%. As I said, yesterday was bloody for Wall Street. Let's have Maria Bird give us the details of Thursday's trade.
On Thursday, as the Dow Jones was down by 1.7%, the S&P 500 down by 1.9%, and the heavy tech NASDAQ was down by 2.1%. This is heavily due to the fact that on Thursday, we saw major sell-offs. Investors were concerned that the tumbling of the bank stocks could have a major impact on the U.S. economy. And furthermore, they are also awaiting the jobs market report, which could indicate an increase in interest rates even higher than expected. These are all various variables that have caused investors to become a bit leery and for Thursday's ending of the day to be much lower than expected.
A bloody day indeed. We do hope today comes out better. A bit of recovery is what we expect. And over in the global oil market, prices were a little change on Friday as traders remain cautious about frequent and steeper rate hikes by the United States Federal Reserve, concerns that triggered rout in energy prices over the last 3 days. Brent futures, which fell about 5% over the last 3 days, were up marginally from near 3-week lows at $81.72 a barrel, while U.S. West Texas Intermediate crude futures was up 2 cents at 0.03% to $75.74, having slumped by nearly 6% in the last 3 trading sessions. The number of Americans filing new claims for unemployment benefits increased by the most in 5 months last week, but the underlying trend remained consistent with a tight labor market. Expectations of ongoing rate hikes in the world's largest oil-producing country and similar remarks over the weekend by the European Central Bank president have cast a shadow over global growth, setting oil up for a weekly fall after 2 straight weeks of gains. The prospect of Friday's jobs report, triggering a faster rate hikes, is already initiating steep declines in other financial markets, and analysts expect oil prices would also be under pressure. In the metals market, gold jumped on Thursday as the dollar retreated after data showed U.S. jobless claims grew more than expected last week, providing some hope to investors that the Federal Reserve's interest rate hike could be less aggressive than feared. Spot gold climbed 1.1% to $1,830.35 per ounce and was last down 0.02% at $1,830.57. U.S. gold futures rose 0.9% to settle at $1,834.60. Spot silver gained 0.6% at $20.12 per ounce. Platinum rose also 0.8% to $944.02, and palladium added 2.1% to $1,401.53. Let's just take a breather. We'll be back and we'll stay in Africa. This is Business Incorporated on Channels Television. Welcome back. Still watching Business Incorporated here on Channels Television. Let's go to Egypt now, where the country has eased the conditions for granting its nationality to foreigners who invest in dollars in the country plagued by inflation and lack of foreign currency. Egypt decided to grant its citizenship to foreigners who buy a property owned by the government or judiciary persons for at least $300,000, according to a decision published in the Egyptian Gazette on the 8th of March. Citizenship will also be offered to foreigners who deposit an amount of $500,000 refundable after 3 years in Egyptian currency. The country will grant citizenship to foreigners who participate or establish an investment project for a minimum of $350,000 while depositing an amount of $100,000 as direct revenue in the foreign currency, which is transferred to the state's public treasury and not refundable. Foreigners who deposit a sum of $250,000 as direct revenue in foreign currency, which is later transferred to the public treasury and not refundable, also have the right to hold Egyptian citizenship. A law passed by Parliament in 2018 and amended by the Prime Minister in 2019 had paved the way for Egyptian nationality to be obtained through investments, such as when depositing in an Egyptian bank or buying real estate, in dollars. Let's now head to Ghana, where we do know that the issue of debt restructuring has been very big there. We know that Ghana's failure to meet a self-imposed deadline to restructure its bilateral debt by the end of February had led to a sharp decline in its Eurobonds, the lowest level in nearly 3 months. This leaves the West African country in a critical stage in dealing with its economic woes. Yesterday on this program, we did tell you that Standard Group Bank had set aside about $18 million just to buffer the consequences of that failure. Well, let's have Professor John Gatsi now. He's an economist and is in Accra, Ghana, to tell us how exactly this is affecting even other corporates in Ghana. Prof, good afternoon. Thank you so much for your time. Prof, tell us, we know that there was picketing of the Ministry of Finance by bondholders, who are not happy with the situation. But we don't hear a lot about that. What's going on in that space with the individuals before we come to the corporates?
Well, I think the individual bondholders, who are largely pensioners, wanted the government to make a categorical statement that the bonds will run and then the value will remain the same. But the government kept saying that it is voluntary. So if you don't participate in a debt exchange program, nothing happens to you. Even though some people within the finance ministry, including the minister, has some apprehension about the tradability of the bonds. But I believe to a large extent that has gotten well with the bondholders. And you cannot continue to be picketing for a long period of time. They have sent enough message to the government. They have received sympathy from Parliament. They have received sympathy from across the public. I believe that is enough to go with.
What about corporates? We see Standard Bank Group has a budget of $81 million, because they are targeting what they may lose. What other corporates are also facing the consequences of this issue?
Almost all the banks are facing similar things. It's only that we have not seen the budget of the banks the books of the banks, how they are preparing to protect their exposure. That is why we don't have the numbers to show. But to a large extent, we know that all the banks are affected one way or the other, and sooner or later, we shall get to know their books, and the level of exposure will be known.
And how is this affecting the overall running of the whole economy? If we have the pensioners, then we have the corporate, especially the banks. You know, I'm wondering how it's affecting the whole economy.
Well, the major problem the economy is facing is liquidity. We don't have liquidity to do things around. And then liquidity risk is also expected to affect the banks going forward, especially when the debt exchange kicks in seriously. So the major risk factor for the Ghanaian economy is liquidity. We don't have liquidity to finance or to pay contractors. We don't have liquidity to pay some critical things. We don't have liquidity to finance the budget. So that is the problem the Ghanaian economy is really under.
And unfortunately now going outside the country for loans is like out of it. But anyway, thank you so much, Professor John Gatsi. We'll certainly follow up on this story as events unfold.
Grateful.
All right, let's go to Zimbabwe. Now, it's good news for them, not so bad. Air Zimbabwe is expecting delivery of a new plane at the end of this month, while plans to resuscitate the London routes are already underway following the clearance of the International Air Transport Association debt. The Minister of Transport and Infrastructure Development, Mr. Felix Mona, says that the government has plans to procure aeroplanes to resuscitate Air Zimbabwe, as well as an aeroplane, which is a 50-seater, that will be very helpful for the short routes, especially in the region. The minister said that they were also focusing on expanding domestic and international route network, with focus now on servicing the London routes. Another good news from Gambia now: an increase in tourism revenue is helping that country boost foreign exchange reserves and pay for a surge in imports of fuel and rice. The number of visitors to the small West African nation jumped 56% to 180,795 last year, helping boost foreign exchange reserves to $464 million, and that's according to the central bank governor. Imports surged about 90-fold to $3.3 billion. That's about $53 million, as Russia's invasion of Ukraine led to an increase in the cost of petroleum products and cereals. Tourism is key for that nation, home to white sandy beaches along the Atlantic Ocean coast as it recovers from the COVID-19 pandemic. Well, that's the program for today. Thank you so much for being a part of it. I'm John Mekwa. Have a great weekend.